Okay, so we're going to talk about FIRPTA, and what we're going to focus on is how to use your Florida bar contract, your FAR bar contract with FIRPTA in a way that's understandable. And my goal is that you can explain it to your folks. And you'll walk away here understanding exactly what to do. I have used the Florida bar as is contract in my example because that is the one I know that you guys use the most often. The language that we're going to go through right now applies equally if you use the other FAR bar contract, what we'll call the old-fashioned, the standard. It's still the same. And what we're going to focus on, I've divided it up into two different pieces. Today, we're going to focus on buyer obligations under FIRPTA. What do you do if you have a FIRPTA transaction and you represent the buyer? Next week, we'll talk about the seller. So let's go over quickly, refreshing you guys' recollection. I know this is everybody's favorite subject, FIRPTA, Foreign Investment and Real Property Tax Act. Reminder what this is, you guys. Remember, when people sell property in the United States of America, they have to pay the Internal Revenue Service a portion of their gain called a capital gains tax. You guys are familiar with that. We don't see it as much in the residential trend life because, of course, a lot of what we're selling residentially is homestead and there are large exemptions. But I know you guys know about it. I know you guys have had to pay it. It's easy to make Tom pay his capital gains tax because he lives in the United States of America. You can imagine if you're from, I don't know, Honduras, and you own a piece of property here and you want to sell it, and you're not going to pay the Internal Revenue Service, what's the Internal Revenue Service going to do about it? So they scratched their heads for a while, and this is what they came up with. FIRPTA. This is supposed to solve the problem. And there's a couple things that you guys need to have in your brain, and you need to be telling this to your colleagues because almost no one gets this right. This is a buyer obligation. That's why we decided to discuss the buyers first. That means, listen to me, if you could see my lips moving, the people that have the most at stake in a transaction is the buyers and the buyer's agent. Those are the people that should be most worried because those are the ones that are going to have a lien placed on their property and could lose their property if this is not all done correctly. So first of all, it is the buyers who are the withholding agents. It's the buyers who's supposed to figure out status and remit tax to the IRS. Now, the withholding that has to happen, the FIRPTA withholding, uses what FIRPTA calls amount realized. Most all the time, you guys, that's going to be your contract price. Sometimes there's going to be extras in your, you might have an addendum where they're buying $100,000 worth of furniture. That could be an item that could be subject to this issue. So most of the time, you're not going to need to worry anything beyond the contract, but you do need to aware it does apply in situations like if Eileen were to give her property to Tom and Eileen was a foreign person, she's still going to have a FIRPTA obligation. So I want you guys to realize it's based on the value and it's not just on sales. And the penalties are steep. To me, these penalties make no sense because in fact, the $10,000 penalty that they assess for just making a typographical error in your 8288, which is we're going to go over here in a minute, $10,000 for a typo, you guys. These penalties to me are worse than regular tax penalties. They can charge you as a penalty the tax that was due and owing for failing to submit your paperwork in time. Listen, even if the tax is paid. In other words, if the seller remits what they're supposed to do and they pay the tax that was due, they don't owe the IRS one nickel. They did everything right. Your buyer still did not comply with the FIRPTA requirements, didn't put the right forms in, didn't fill the forms out correctly, didn't send the forms in on time. Listen, they can be fined up to the amount of the tax that was actually owed. Now, why am I going over this over and over and over again? Because it is the buyer who has to pay all this. And the way that the IRS makes sure the buyer does is, look, they get a lien on the buyer's property if this was not done correctly. All right, since we have a small group, do we have any questions? I want to hear from anybody as we go along. Do we have any questions about this important point that I want you guys to make sure you're getting? Buyer obligation, buyer responsibility. So what is a buyer to do? First of all, is the seller a U.S. person? If so, no withholding. And you say to me, Meredith, how do I know that they are a foreign person or not? Well, a couple of things. First of all, the contract that we're going to go over in just a minute, your contract that you use, requires the seller to tell you, buyer, if they're foreign. That's item one. They're supposed to tell you. If they don't tell you, they don't reveal that information to you, you may be able to cancel the contract on that basis. So number one, the way you know is the seller is supposed to tell you. Number two, what the seller is supposed to do to back up the truth of what they say is sign a certificate. Now, you guys don't normally see these because it's the title company that handles them, and we all do it as a part of our regular every single transaction. There is a document that signs that says, I am not a foreign person. Sometimes it's within the seller's affidavit, sometimes it's a separate document, but it'll be somewhere in your file. Try to pay attention to it, guys. I know that it's hard for y'all to know what to keep from the title company, what copies to keep and what not to keep. If I represented a buyer, the document about this would be something that I would want to keep, because if this document is obtained, your buyer is off the hook, even if your seller lied. So here's what's important. It is the buyer's obligation to figure it out. But the way the buyer, quote, figures it out is just making sure that they get this certificate of non-foreign status. And I'm telling you, it is in every single transaction you guys do, because I know everybody that you close with, and I'm just telling you, every closing agent has this as a part of their packet. If they do not, you need to get with them, get with me. I'll get them a copy. You should not close any transaction without this FIRPTA language. Again, sometimes it's going to be in the seller's affidavit, and sometimes it's going to be a separate form. But it would be what I would sign as an American person. Anyone who's selling property that's not foreign has to sign this affidavit. Anybody have any questions about this? Okay, now here's something I need you guys to get in your head. It is not your job to wonder, well, their last name is fill in the blank, and that sounds foreign to me. I won't even go on a rant about why that's a horrible freaking idea. But listen, it is not your job to be an ICE agent. It is not your job to run around and try to figure out what the status of this foreign person is. That is not your job. Do not undertake that inquiry. If you represent the buyer, they're supposed to tell you. If they don't tell you, you should assume that they are not foreign. Okay. I just don't want you guys to feel like you have any kind of investigatory obligation. You have none whatsoever. Your only obligation when you represent the buyer is either make sure that that non-foreign affidavit is signed or withhold. Okay. So let us suppose that they can't sign the affidavit because they are not, in fact, one of these four things. So you have to either be a United States citizen, a green card holder, a domestic LLC, a domestic partnership, a domestic corporation, or you must meet the substantial presence test. If you are not one of those things, you are a foreign seller. This is important. You're going to have sellers say, well, I have an ITIN number. Anybody can get an ITIN number. The IRS is very happy to take income tax from anyone who wants to pay it. You do not have to have legal status in this country to get an ITIN number. You get it. You must, and you're going to have people say, well, I'm here on a HB5 visa. A visa is not a green card. Now, sometimes visa holders and those folks will be able to satisfy the substantial presence test, but that's not something that you want to spend a whole lot of your time on trying to figure out. That really should be done by a CPA. I've shown it here as more than 183 days over a 3-year period to be enough to satisfy the substantial presence test. See there, number 4. That is a simplification. It's actually you have to have a certain number of days in year 3, certain number of days in year 2, certain number of days in year 3, all combined have to exceed over 183 days. So that's a lot of times where the visa holders fall in here. They've been here for some number of years, and so they qualify under the substantial presence test. So once again, you are foreign if you are not a U.S. citizen, you do not hold a green card, you are not a domestic partnership or company or entity, And if you're not one of those three things, you have to at least been here more than 183 days over a 3-year period. Any questions about what makes you a foreign person? And we're going to be circulating this video as well as this PowerPoint, just so that you guys can have that if you need it. Any questions about any of these things? Green card holder is a green card holder. You guys should all know what that is. A citizen, substantial presence. We got it. So if you're not one of those things, if you don't fall under one of these, then guess what? We have to do FIRPTA withholding. So what does this mean? First of all, I've broken it down this way, and I hope this is going to be helpful and not hurtful, because I know a lot of people generally walk around thinking FIRPTA is 15%. And it generally is 15% within a few exceptions. So let's talk about what the FIRPTA rates of withholding are. Now remember, in my scenario, we have determined that Elisa is a foreign person, and so we're going to now have to see, we the buyers are going to have to make sure that the withholding is done correctly. So if she's buying something that's more than $1 million and it's anything but her residence, so investment property or even a vacation property here, anything greater than $1 million is 15%. Okay. Now, this next category is where a lot of people get hung up. It's actually only 10% if the purchase price is between $300,000 and $1 million, and the buyer signs an affidavit that they have the intention to make this place they're purchasing their residence. Now, the reason you guys don't see a lot of this 10% withholding is because a lot of the times the buyers don't want to make the promise. They don't want to take the risk when they sign that affidavit and they say they're going to live there and then they don't. Then what happens? We're going to go over that in a minute. And you're going to see why it's maybe not always a great idea for your buyer to sign an affidavit. But if they're willing to do it, if they're willing to say that there's going to be their residence over the next 2 years, it's only 10% between $300,000 and $1 million. And it is the buyer's choice whether to sign that affidavit. Similarly, 0 if the property is less than $300,000 and they use it as their primary residence and they sign the same document. Okay. So the withholding rates are as follows: 0 if it's less than $300,000 and the buyer will use it as their primary residence. 10% if it's $300,000 to $1 million and they're going to use it as their primary residence. If not, 15% if it's not going to be their primary residence or they don't want to sign the affidavit that it will be. And then anything over $1 million or anytime they won't sign is 15%. Do we have any questions about those percentages? All right, so one of the things I want to show you here from an old presentation I did, you should be able to, can you see now a Word document, Elisa? And I will also be glad to send this around too. What I wanted to show you guys is right here, what is required. Well, remember we were talking about the signing the affidavit. The purchase price is less than $300,000 and the buyer is an individual with a definite plan. This is what this document your buyer is going to have to sign. Again, circling back, this is if your buyer is going to say there's no withholding less than $300,000, 10% between $300,000 and $1 million, 15% otherwise, if they can sign this document or this document contemplated here. And this is the problem. They have to be an individual person. So it cannot be an LLC or a trust or anything like that. They must have definite plans to reside at the property for 50% of the number of the days of the year the property is used by any person during the first 2 12-month periods immediately following the purchase. So here's the major problem. We don't know what a definite plan is. We do know that there have been cases where someone who was pregnant when they purchased and then moved to purchase a new house because they said they needed more bedrooms. After the closing happened, they didn't withhold FIRPTA because they were going to live there for 2 years. Turns out they couldn't because didn't want to because they had another child. decided they need more room, that was not enough of an excuse. So here's the rub. Your buyer is swearing that they're going to do something. This language, they're going to live there. They have a definite plan to reside in the property for 50% of the number of days it's going to be used. The danger for your buyer is what happens if that definite plan falls apart. And the second danger for your buyer is what should your buyer have known such that the plan cannot be considered definite. So in other words, it is your buyer who is taking on a considerable amount of, not maybe a little bit of liability if their plans change. So even if they do know that they're going to reside in the residence, so they want to do the seller a favor, and they want to say, oh, we don't have to do withholding because I'm going to be living there, or withholding only has to be 10% because I'm going to be living there. And it turns out that your buyer doesn't live there, and then they're getting that for whatever reason that, as required, for whatever reason, who knows what, then it's your buyer that's going to be fighting with the IRS because they did a favor to the seller. It is for this reason, guys, that you hardly ever see 10%. If you stop and think about it, Eileen, Tom, some of you have seen a lot of these. If you really stop and think about it, you say, wow, I've never really seen 10%. I've only seen nothing or 15%. That's because, Eileen, buyers don't want to take a chance. Why should they take that large of a potential penalty to themselves if their plans change just to do a favor to the seller, because the contract does not make them do that. We're going to go over that in just a minute. Do we have any questions about that? Any questions from anybody? So what we're talking about is the intend to reside piece. If you want to withhold 0 if it's less than 300,000, or 10% if it's between 300 and $1 million, the buyer must sign that document at closing, promising the IRS that they're going to live there as their primary residence. And if they don't, if that's not how the circumstances turn out and their file gets audited, your buyer could be in trouble and owe large penalties. So let's talk about right now what it is that your contract says, because this is what governs how you guys proceed, not what your agent on the other side of their transaction happens to think the law is going to be. Now, you're going to notice a couple of things. I have frequently in here highlighted buyer, because I really want you to get this through your head that this is the buyer's problem if it's not done right. So this is what your contract says. Early on in your contract, there is a general statement. I think it's around line 230. If somebody has a contract, they can check me. There's a general statement about FIRPTA, and then it refers to this, which is section 5 of the title standards, or V. So this is V, and this is the same information, only it gives you all the detail that you need. So we're going to walk through this in a way that I don't usually do for you guys, because I know you're good at reading. But I really want to get this in your head. So first of all, line 552 makes it clear that it's the buyer responsibility. And that's why you're seeing, if you've ever wondered, why am I seeing that up to 15%? That's why. I just showed you the circumstances under which it could be 10. All right. So the contract requires that seller advises buyer. Then it lays out the law, which is the FIRPTA requires withholding of up to 15% unless there is an exemption. The exemptions are you're not a foreign person, or you want to buy a piece of property, you're buying a piece of property they're going to use as your residence, and it's less than 300,000. That's an exemption. All right. Now, if you don't apply for one of those exemptions, you can get what's called a withholding certificate. Talks about that on line 554. What is a withholding certificate? That's a document from the Internal Revenue Service, which the seller has to get ahead of time. They present that to the closing agent. The way that a withholding certificate is obtained, you guys, is basically the seller does their tax return. They say, okay, I made $100,000 here. I would normally owe you guys, $15,000, but I don't because of this, that, the other thing. And then they get down to a number, and that withholding certificate from per the IRS is not 15%, it's actually only $3,000, then that's all the buyer has to collect. So the withholding certificate is something that the buyer can rely on at closing to withhold less than 50%, but it is the seller who must obtain it. And it is quite literally, when your buyer gets it, it says right on it, withholding certificate. It obviously comes from the Internal Revenue Service, and it makes clear the amount that has to be withheld in the transaction. So you get a withholding certificate. The contract says you have to honor the withholding certificate. If they haven't gotten the withholding certificate yet, but they've just applied for it, hold on, I'm clicking too much. Hold on, guys. If all they've done is apply for a withholding certificate, that's on line 565. So in other words, they had a good listing agent told them you need that withholding certificate so they won't withhold 15%. They've made their application, but darn it, the IRS hasn't gotten it in time for closing. Now what? Well, guess what? It is the buyer's option. If the seller proves that they've applied for the withholding and haven't gotten it, the buyer has two options. The buyer can say, I'm sorry, I'm not going to wait on you. We're sending the money up. We're going to go ahead and send the full 15% to the IRS. Or I will agree that the title company or a CPA can hold the funds in escrow. That is the buyer's choice always. Now, the contract provides that it's the seller's expense if it's determined the funds should be placed in escrow and held until the withholding certificate comes back. So the way that the IRS imagines this works is Eileen applies for her withholding certificate. She has to go to closing. She doesn't get the withholding certificate in time, goes ahead and closes at Nagel's office. Nagel holds back the full 15%. I have proof that she applied for her withholding certificate, and so I just sit on that money. Well, guess what's happened? The IRS is slower and slower all the time. As y'all know, they were a big target of the Doge cuts. I'm sure many people have different opinions about IRS agents. They're not my favorite people in the world either. However, we do need more FIRPTA agents because it has been a nightmare to have to deal with them. Because it's taking so long, a lot of buyers are now choosing option A. In other words, once they talk to a CPA, it is highly likely the CPA is going to say, don't do that favor for your seller. There's no reason for you to do that favor for your seller. It's just going to cause this issue to be hanging out there for goodness knows how long. Why should you do that? I'm just letting you know. Why should a buyer do this? You should be asking yourself this question when you're representing the buyer, because they are the one taking chances. So it's always been the buyer's option. We used to see a lot of selection of item B, which is they proved that they applied for the certificate, the sellers, but they just didn't have the answer back because the IRS imagined one day 30 years ago that you could get a withholding certificate within 30 days. Well, forget about that. It takes a long, 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 long time to get the withholding certificate. So for this reason, a lot of times people are just going ahead and choosing item A, which is timely remit. Any questions about that?
When the so you hold the funds, you finally get the certificate, and now it's time to either release the funds or pay the funds to the IRS. Are the agents notified?
Who? The realtors?
Correct.
No, it's typically handled completely by the title company. I don't know of any circumstance where we have ever said to the agent, hey, by the way, that money we've been holding for you for 18 months on yada, yada transaction, they finally got their money. And I do want to say this further. When a title company has undertaken this work for you guys and they do it wrong, they are liable. There's somebody in town running around telling a fiction that if a title company messes you up here, doesn't send the check in time, they're somehow saying that they're not liable because they messed it up here locally. That is not true. No, there's no obligation for a closing agent to do this for you. If a closing agent is going to do it, they have to do it reasonably, which means they should not be negligent, which means the check shouldn't be sitting in a drawer that somebody else finds later, right? So if someone undertakes this work on behalf of your buyer, don't forget they have to do it correctly. The title company is not off the hook. There is no, it wasn't our obligation. If they undertook the obligation, the law expects that they will undertake it reasonably. So, and then part of that, Eileen, does not include letting the real estate agent know. You would have to remember or somehow know in the transaction. That's an excellent question. Anybody else have any questions about holding or remitting funds? Here's the issue that comes up a lot, and that is who's supposed to pay for all this? Because if money were no option, what would happen was in every transaction, both the seller and the buyer would have their own CPA. Because we want to make sure that the numbers are calculated correctly, and we want to make sure that the forms are filled out. One of the things that you'll see down here on line 576, in addition to the money, one of the things that you see that we have to do, the buyers have to do, is provide, look, seller copies of IRS forms 8288, 8288A. Here again, the contract is contemplating correctly that this is something the buyer should be doing to make sure it's done correctly, because it's the buyer that's going to have took us on the line if it's not done correctly. It's the buyer who's going to pay the penalty. It's the buyer whose property is going to be liened. So technically, it should be the buyer's CPA that is making sure this is done right. But then you'll say, well, wait a minute, that doesn't make any sense, because shouldn't the seller's CPA be figuring out what their tax obligation is? Yes, but remember, those are not the same things. The buyer's job is not to figure out the seller's tax obligation. The buyer's job is to figure out whether they have to remit. And remember, the buyer has to remit unless they meet one of the exceptions. The amount that's finally owed by the seller once they do their tax return is a seller and a seller's CPA problem. So I can tell you, and Joni, jump in if you can hear me talking. I think that the fee right now that most CPAs are charging to prepare this work is about $750. Are you there, Joni?
It depends on what services they need. So if they're going to have them file a tax return, if they need to obtain an I-10 for them. But $750, I think, is just to prepare the documents if they have all the information they need.
That's just to prepare the 8288 and the 8288A. Is that right, Joni?
That is correct.
Right. And here's why you want to have somebody who knows what they're doing this correctly. If the wrong TIN number is on there, or there's some transposition of figures, or there's anything wrong with these forms, if these forms are done incorrectly, it's the buyer's responsibility. If I were a buyer, I would not, and if you work with my office, you are not relying on a closing company to figure this out for you. That's not what you want to do. I understand that it's cheaper. I understand why you'd want to do it, but I would not be advising my realtors, my customers to do this if I were you, because if it's done wrong, they're going to blame you for giving them poor advice. You will note that the contract itself says that it says the parties are advised to get legal and CPA advice. It says that to make it clear that this is not a closing company job. This is definitely not an agent job. This is a professional's job. And this is the kind of thing that if they're working with a professional, make sure it's someone who's actually a CPA. I cannot tell you guys the number of files, more than 5, that we've gotten from people that think they've gone and hired a tax professional offline, and the person is completely wrong and has zero idea what they're doing. It's easy, it's not easy, but a lot of people can go through the process to become a certified tax preparer. That is something entirely different than a certified public accountant or a FIRPTA specialist, whether they're an attorney or other type of accountant. So please, please, please use your professionals. So here's a little overview. What are our responsibilities as a buyer? So first of all, you determine the status. We talked about that. They sign the non-foreign affidavit, and that's the end of the inquiry. Listen to me carefully. That is the end of the inquiry. You don't need to go behind them, around them, through them, trying to figure out if they're telling you the truth. If they sign the non-foreign affidavit, that's it. If they can't sign that, that means that they're not a green card holder, not a U.S. citizen, can't meet the substantial presence test. That means that you have to withhold collect and withhold as the buyer. We talked about the amounts. We said if it's less than 300,000 and the buyer's willing to sign a document that they're going to live there for 2 years, it will be their residence, then no withholding. Between 300 and $1 million, if they sign the same document, 10%. If they can't sign that document or above $1 million, 15%. Most times when you see withholding, you're going to see the 15% because the buyer doesn't want to take the chance in getting it wrong. The 8288 has to be prepared by the buyer. In other words, it's the buyer's obligation to make sure it's done correctly, and it's provided to the seller and to the Internal Revenue Service. You have to get their tax identification number or proof that you have applied for a tax identification number. Now, I'm going to tell you, this is another thing that it's unlikely your buyers can do without the right kind of help. The process for obtaining a tax identification number has now become extremely burdensome and time consuming. And it's only going to get worse. So those used to be able to be obtained fairly quickly. It might well delay your closing. So you need to find out about that ASAP. And you are going to have them want to work with the tax professional right away. We talked about the concepts of the withholding certificate. Remember, that's the document that you get from that the seller gets from the IRS that either says, hey, they've given us the right paperwork, so you don't have to withhold 15%. You instead withhold this flat amount. And if you rely on that withholding certificate, even if it's later wrong, you're off the hook. We talked about we didn't talk about, but just a reminder, this is, we had not too long ago, a seller wanted to back out of a transaction because he was not clearing 15%. There was not going to be 15% to send to the IRS. Hey, guess what? That's not an excuse for canceling the contract. The contract says on the first page that, well, one of the early pages, that if there is money to be brought to the transaction to make compliance with FIRPTA possible, then that's what has to happen. And the law would contemplate then the seller has to wait and get that money back from the IRS. Now, concerningly is this last requirement. Effective September 30th, all FIRPTA payments are supposed to be made electronically to the IRS. What has happened in the past is we have sent in paper checks along with the 8288 and the 8288, those forms. That worked okay, but the federal government issued an executive order wherein they determined that they were going to require all electronic payments to be made. All tax payments to be made via electronic system, which would include now the FIRPTA payments. The problem is the same executive order and regulations that go along with it also talk about money being sent back to the same entity that paid the money. Well, we already know that's going to be a problem because it's the buyer who's supposed to submit the money. And so if too much has been submitted under the current system, the IRS would return the overpayment to the buyer. That's a big problem, obviously. So I've also, what's not clear to us is how is a buyer supposed to actually do this? Like, what is the mechanism by which this would be done? Can you imagine a situation where a seller would just trust a buyer to send the money up to the IRS that's going to be needed to pay for the seller's tax obligations? Nobody's going to close like that. So that means it's going to fall on the institution, whether it's the CPA or the closing company, to do that electronic filing. How's that going to happen? We're not entirely sure. We do know that they are talking about some other options other than the EFTPS system, like making direct payments from a bank account. That's going to cause the same problem. So I'm raising problems to you guys without a solution. And we don't have a good solution yet. There's people working on solutions. I don't know what any of us in the industry are going to do if we don't have a good solution by September 30th. But we got to figure it out. So if you've got something closing on or after September 30th, if you know you've got a FIRPTA file right now, you should be picking up your phone and calling your title company and see how are they working on this problem. Because any money is supposed to be remitted after September 30th have to be done electronically. No more can we just send in the paper check. Any questions about that? Because that's, if you stop and think about that for a hot minute, that is a whole separate set of misery and delays and expense in the transaction. Okay, let's, this slide that you're going to get is just the little blurb of the detail that we just went through. So you're going to get both if you want to get a copy of this PowerPoint. And then finally, conclusions and best practices. Buyer requirement to figure out status. Apply the withholding rates. Remit the tax within 20 days, and you're supposed to do that electronically. Provide the forms to the seller. And consult knowledgeable legal and tax professionals to make sure this is all being done correctly. Now, I would love to hear from any of you guys regarding what you're seeing out in the field, or what questions you have about how this actually works based on everything that I've just said. Anybody have any questions or any practical problems or issues? Nothing, huh? Okay, so if you want this recording and or my slideshow, you can reach out to our office. We will be glad to send you a copy. If you want to listen to it again, you can. If you have any questions after you review the information, I will give you my cell phone number. Feel free to use this whether you've ever closed with me or not. I want to make sure that I answer your questions and you know what you're doing. It's 352-217-7009.